Welcome back to TalkTickers, the show where we break down the earnings calls and give you the insights you need to make, smart trades.
That's right.
So today,
Informed decisions.
we are diving into Progressive's Q4 2024 report, and this one was a doozy.
It was a strong quarter indeed.
Yeah.
What stands out to me is how they managed to pull off record growth while still maintaining incredible profitability.
Right.
It's a tough balancing act.
It is.
Especially in today's, economy.
Exactly. So first, let's just give everyone a rundown of the key numbers.
Okay.
Progressive's net premiums written jumped a staggering 21% year over year.
Wow.
Landing at $74.4 billion.
Huge.
To put that into perspective, that's like they added the entire premium volume of the 8th largest auto insurer in just 1 year.
That's unbelievable.
And it's important to note this growth wasn't just driven by raising prices.
Right.
They also achieved record policy growth, adding over 5 million new policies.
Yeah, more than doubled their previous best year.
More than double. So massive growth. Check.
Check.
But as you said, what's really impressive is that they didn't sacrifice profitability to get there.
Exactly.
Their combined ratio came in at 88.8%.
Which is fantastic.
Which is well below their target of 96%.
Yeah. For those unfamiliar with the insurance world, the combined ratio is essentially a measure of profitability.
Right.
The lower the ratio, the better.
Yeah.
A combined ratio below 100% means the insurer is making an underwriting profit.
Right.
So 88.8% is truly impressive.
Truly impressive.
Yeah, and I think this performance really speaks to the effectiveness of their strategic approach, particularly their focus on two key areas, their people and culture, and their highly competitive pricing strategy.
Okay, let's dive into that culture piece first.
Right.
On the call, Progressive emphasized that even with record hiring in 2024, their employee growth is still lagging behind their policy growth.
Interesting.
You might think that would lead to overworked employees and a dip in service quality, but that doesn't seem to be the case.
No, not at all. And that's because Progressive has very intentionally cultivated a unique culture.
Okay.
They're extremely selective in their hiring process, accepting less than 3% of applicants.
Wow.
This ensures they're attracting top-tier talent.
Right.
Who are not only highly skilled, but also aligned with the company's core values.
And this approach seems to be paying off big time. Their employee engagement scores are through the roof.
I bet.
According to Gallup, they're in the 98th percentile for employee engagement.
That's amazing.
That's incredible, especially when you consider that overall employee engagement is reportedly at a 10-year low nationally.
It's really highlights the importance of investing in your people.
Yeah.
When employees feel valued, respected, and empowered, they're more productive, more engaged.
Right.
And more likely to provide exceptional service in the insurance industry.
Yeah.
That can translate directly into a more efficient and accurate claims process.
And speaking of claims, that leads us perfectly into Progressive's competitive pricing strategy. Because as you mentioned, the two are deeply intertwined.
Absolutely.
Yeah.
Claims costs typically account for a whopping 70 to 75% of Progressive's expenses.
Wow.
Making claims handling the most critical factor in their pricing strategy.
Makes sense.
They've developed what they call a cost curve, which is essentially a framework for optimizing both the accuracy and efficiency of their claims process.
So it's not just about paying out the right amount on claims, it's also about managing the entire process as efficiently as possible.
Exactly. And it's fascinating to see how this plays out in the real world.
Yeah.
For over a decade, Progressive has maintained a significant cost advantage compared to the rest of the industry, and that gap is actually widening.
So that gives them the flexibility to offer more competitive rates while also continuing to grow rapidly. So they're clearly doing something right. But what exactly are they doing to achieve these remarkable results in claims handling? Well, on the call, they gave a very interesting example. Their use of technology, specifically in photo estimating.
Yeah, the photo estimating example is a great illustration of how Progressive is using technology not to replace human expertise, but to augment it.
Right.
By using photo estimating, they've been able to complete 2.5 times more estimates per day compared to traditional methods.
That's incredible.
That's a remarkable improvement in efficiency.
They're using cutting-edge technology like machine vision and deep learning to automate certain parts of the process.
Right.
They even mentioned something called transformer architectures, that same technology that powers ChatGPT.
Oh, wow.
But what really impressed me was their emphasis on human oversight.
Okay.
They're not just blindly letting the algorithms run the show.
Absolutely. Despite all these advanced technologies, 100% of their photo estimates are reviewed by experienced claims professionals.
Wow, so they're really combining the best of both worlds.
Exactly. This blend of human expertise and technological power is what sets Progressive apart.
And the results speak for themselves. By incorporating machine vision into their photo estimating workflow, they've achieved an additional 2 times increase in productivity.
Wow.
That means they're processing 5 times more estimates per day than they were before.
That's remarkable.
It's incredible. And they're not stopping there. They even discussed their future vision for this technology, mentioning a technique called Gaussian Splatting.
Gaussian Splatting. That sounds a little intimidating.
It does. What exactly is that?
It might sound like something out of a science fiction movie, but it's actually a cutting-edge technique that allows them to create dynamic 3D models of vehicles from customer videos.
Okay, so instead of just looking at photos, they're creating 3D reconstructions.
That's right. And this has the potential to completely revolutionize their claims process, leading to even more accurate damage assessment, especially for those hard-to-see areas.
That's incredible.
Yeah.
I can see how this could transform everything from virtual inspections to total loss evaluations.
Yeah.
They even hinted at the possibility of predicting internal damage, which would be a game changer.
It's truly cutting edge, and it underscores Progressive's commitment to continuous improvement and innovation. Right. They're not content with just keeping up.
Yeah.
They're actively pushing the boundaries of what's possible in the insurance industry.
So we've got a company that's firing on all cylinders. Record growth, impressive profitability, a thriving culture, and a forward-thinking approach to technology.
It's an impressive story.
But there was one potential cloud on the horizon that they addressed on the call. Trade wars.
Yes, that's the big unknown.
Yeah, the call raised some important questions about how potential tariffs could impact Progressive's business.
Right.
On the one hand, tariffs on car parts from Mexico and Canada could drive up repair costs, potentially squeezing their margins.
Yeah, that's a valid concern. But on the other hand, they also pointed out that potential increases in lumber tariffs could actually benefit their commercial lines business.
Right.
As the logging and trucking industries grow, so too would demand for their insurance products.
Right. It's a complex situation with both risks and potential opportunities. But I was impressed by Progressive's proactive approach. They're modeling various scenarios to understand the potential impact. And they have a history of adapting quickly to market changes.
That's good.
Plus, their current strong margins provide a buffer to absorb some of the initial shock if those tariffs do materialize.
Right. They didn't seem overly concerned about the potential trade war impact.
Right.
They seem confident in their ability to manage the situation effectively.
Their track record certainly speaks for itself. They've consistently demonstrated an ability to navigate challenging market conditions. So overall, this call painted a very positive picture of Progressive.
It seems like it.
They're a tech-forward company leveraging data and innovation to drive efficiency and customer satisfaction. Their strong culture and focus on people appear to be major competitive advantages. But, as with any investment, there are always risks to consider. And the trade war situation is definitely one to watch.
For sure.
Now, before we move on, let's take a moment to clarify something for our listeners.
Okay. What would you like to address?
Well, we've been discussing some pretty specific details about Progressive's business and their financial performance. And while we aim to be as informative as possible, it's important to remember that we're not financial advisors.
Absolutely.
The information we share on TalkTickers is for educational and entertainment purposes only.
Right.
We're not providing investment recommendations.
No.
Any investment decisions you make should be based on your own research, risk tolerance, and financial goals.
For sure.
Always consult with a qualified financial advisor before making any investment decisions.
Couldn't have said it better myself.
Okay, good. Now with that disclaimer out of the way, are you ready for the fun part?
You know it. It's time for our favorite segment. This is not financial advice, where we explore some outlandish, yet strangely plausible trade ideas.
Buckle up, listeners.
Things are about to get interesting. So for our first, this is not financial advice trade idea, let's tap into that tech-savvy side of Progressive we've been discussing.
Oh, I like where this is going. Lay it on me.
Picture this, a tech giant.
Yeah?
Maybe an Apple or a Google with their, mountains of data and their massive customer base.
Right.
Decides they want to shake up the insurance market.
Okay.
What's their move? They acquire Progressive, of course.
Hold on. Apple selling car insurance. That's a pretty bold move.
Bold, yes, but implausible. Not really.
Okay.
Think about it. Progressive is already a tech-driven company.
Right.
Their whole approach would fit seamlessly into a tech giant's ecosystem.
Yeah.
Imagine Apple Car with Apple Insurance powered by Progressive's data and expertise all bundled together.
Okay.
It's a match made in Silicon Valley heaven.
I'm starting to see the vision here, but every grand plan has its potential snags.
Of course.
What could throw a wrench in this tech takeover?
Well, you've got regulatory hurdles galore.
Yeah.
Integrating two completely different company cultures could be a nightmare.
Right.
And let's not forget the antitrust watchdogs.
Right.
Regulators might not be thrilled about a tech behemoth like Apple or Google suddenly dominating yet another industry.
Those are all valid points.
Yeah.
But the potential rewards, if they could pull it off, we're talking about completely reshaping the insurance landscape.
Exactly.
Yeah.
High risk, high reward.
Right.
Which makes it perfect for our not financial advice segment.
Okay, so that was trade idea number 1. What else you got?
Let's flip the script entirely for trade idea number 2. The short squeeze.
Ooh, playing with fire.
Yeah.
I'm intrigued. Tell me more.
Progressive is killing it, right? Everyone knows it.
Right.
But what if there's a hidden weakness that most investors are overlooking?
Okay, I'm all ears.
Okay.
What kind of weakness are we talking about?
Their dependence on the automotive industry. We've got electric vehicles gaining popularity,
Yeah.
self-driving cars on the horizon,
Right.
and ride-sharing services changing how people get around.
Right.
All of these trends have the potential to disrupt the entire car ownership model.
Right. Right.
Which could have a huge impact on Progressive's core business.
That's a fascinating angle. I hadn't thought about that. So the contrarian play here would be...
Shorting Progressive stock.
Okay.
Betting that these disruptive trends in the automotive industry will eventually catch up with them.
Right.
It's a risky bet, of course, but it could pay off big time if those trends accelerate faster than anyone expects.
As always, listeners, this is purely hypothetical. And to reiterate, definitely not financial advice. We're just having a little fun exploring the what-ifs of the market.
Absolutely.
Speaking of what-ifs, let's shift gears and talk about what progressives themselves see on the horizon.
Okay.
On the earnings call, they did touch on their outlook for the coming year.
Right. While Progressive doesn't give specific financial guidance, they did offer some valuable insights into their strategic priorities for 2025.
They reiterated their commitment to achieving a combined ratio of 96% or below.
Which is impressive.
Remember, they absolutely crushed that target in 2024 with a combined ratio of 88.8%.
Yeah.
It's clear they're not letting up on the profitability front.
And that focus on profitability goes hand in hand with their commitment to growth.
Right.
They made it clear that they intend to keep pushing for strong policy and premium growth, leveraging their competitive edges in pricing, technology, and customer experience.
They seem particularly bullish on the potential of their digital channels.
It makes sense.
They're seeing strong adoption of their digital tools and services by both customers and employees.
Right.
And they believe this trend will continue to drive efficiency gains and improve the overall customer experience.
It's a smart move. Their investments in areas like photo estimating, machine learning, and 3D modeling are clearly paying off. And they're well positioned to capitalize on the ongoing shift towards digitalization in the insurance industry.
It's like they're building the insurance company of the future right before our eyes.
Yeah.
They're not just adapting to change, they're actively shaping it.
Exactly. And that brings us to another important theme that came up on the call. The impact of broader macro trends on Progressive's business.
Right. They spent a good chunk of time discussing things like inflation, supply chain disruptions, and of course those looming trade wars we touched on earlier.
Of course.
It's clear that these macroeconomic factors are top of mind for them, and for good reason. They have the potential to significantly impact both their costs and their growth trajectory.
Right. They were particularly insightful in their analysis of the potential implications of those trade wars.
Okay.
They acknowledged the risks, especially the possibility of tariffs driving up the cost of car parts and other materials.
Yeah.
But they also highlighted potential opportunities like increased demand for their commercial lines products.
Right.
Due to growth in the logging and trucking industries.
It was a very balanced and nuanced discussion. They weren't downplaying the potential downsides, but they were also emphasizing their ability to adapt and maybe even benefit from these shifting global dynamics.
Right.
They highlighted their sophisticated modeling capabilities and their track record of reacting quickly to market changes.
That agility is crucial in such a rapidly changing landscape.
Right.
It's not just about riding the waves, it's about building a surfboard that can handle any conditions.
Speaking of navigating choppy waters, let's dive into another "this is not financial advice" trade idea inspired by those macro trends Progressive discussed.
All right, hit me with it. What's the play?
Let's call this one playing the tariff tango.
Okay.
What if those trade wars heat up even more than anyone expects?
All right.
Car part prices skyrocket, repair costs go through the roof,
Yeah.
and suddenly Progressive's margins start to shrink.
Okay, I'm following you. So the play here would be to...
Short Progressive stock,
Okay.
betting that those trade wars will hit them harder than they anticipate. It's a contrarian play, for sure, but if those tariffs really start to bite, it could be a profitable one.
It's certainly a bold move, but as with any short position, it carries significant risk.
Of course.
If those tariffs don't materialize, or if Progressive manages to navigate the situation better than expected,
Right.
those short sellers could be in for a world of hurt.
Exactly. Which is why, once again, we have to emphasize that this is purely hypothetical and definitely not financial advice.
Right.
We're just exploring some possibilities, playing devil's advocate, having a little fun with the market.
Right. The goal here is to spark your imagination,
Yeah.
get you thinking critically about the different factors that could influence a company's performance.
So we've covered the results, the guidance, the macro trends, and even thrown in some wild trade ideas for good measure. But now, let's take a step back and talk about the bigger picture. What does all of this mean for investors?
Well, this earnings call should leave investors feeling cautiously optimistic about Progressive's prospects. Their strong financial performance, their commitment to innovation,
Right.
and their proactive approach to managing risk are all positive signs.
But as we've discussed, the macroeconomic environment remains uncertain.
Right.
Potential headwinds like trade wars and disruptive trends in the automotive industry could throw them off course.
It's a classic case of high risk, high reward.
Right.
Progressive is a company with tremendous potential.
Yeah.
But it's not without its vulnerabilities. Investors need to carefully weigh the potential rewards against the inherent risks.
So should investors buckle up for a bumpy ride, or is Progressive a safe bet in a turbulent market?
That's the million-dollar question, isn't it?
It is.
And unfortunately, we don't have a crystal ball.
Right. Ultimately, the best we could do is equip ourselves with the knowledge and insights we need to make informed decisions. And that, my friends, is what TalkTickers is all about.
We're here to help you cut through the noise, analyze the data, and understand the stories behind those earnings calls.
Right.
We're your shortcut to becoming a more informed and insightful investor.
Now, before we wrap up this deep dive into Progressive, we want to leave you with a final thought-provoking question to ponder.
Okay.
If Progressive is so successful in leveraging technology to enhance their claims process, could they eventually become a technology provider themselves?
Oh, I like that.
Could they license their solutions to other insurers or even branch out into other industries altogether?
It's certainly an interesting possibility.
Yeah.
They've developed some incredibly sophisticated tools and technologies.
Yeah.
They could potentially monetize those assets in entirely new ways.
That is definitely food for thought, listeners. Let us know what you think on social media, and we'll see you on our next deep dive into the world of earnings calls and market insights.
Remember, this is TalkTickers, where we break down the complexities of the market and help you make sense of it all.
All right, so we've spent this whole deep dive, really digging into Progressive's Q4 2024 earnings call.
It's been a fascinating journey. Yeah.
I mean, we've covered a lot of ground here, from their record-breaking financial performance.
Right. The numbers were impressive.
To their innovative use of technology, their strategic approach to navigating, all the stuff that's going on out there, the macro environment.
Right. It's a tricky landscape out there.
And we even, threw in a few what-if trade scenarios.
Had a little fun with it.
Right, because he doesn't love a good hypothetical, especially when it comes to the market. But now, it's time to kind of bring it all home.
All right, let's wrap it up.
With our final takeaways, Progressive is firing on all cylinders.
They really are.
Their strong financial performance, their commitment to innovation, and their proactive approach to managing risks. I mean, all incredibly impressive.
It's a well-run company, for sure.
They're not just keeping up with the times. They're actively shaping the future of the insurance industry.
They seem to be ahead of the curve.
Their focus on people and culture is a key differentiator, I think, fostering a highly engaged workforce that's driving their operational excellence.
Yeah, their employees seem really bought in.
And they're not afraid to embrace cutting-edge technologies.
Or that Gaussian Splatting thing? Wow.
Right. but they still recognize the importance of human expertise. It's a powerful combination.
There's a good balance.
However, investors should keep in mind, the potential challenges ahead, as we discussed, the macroeconomic environment. It's still kind of a question mark.
It's a wild card for sure.
Potential headwinds like trade wars and disruptive trends in the automotive industry could, throw them off course.
It's always something, right?
Always something, right?
Yeah, it's all about managing those risks.
So it's a balancing act, weighing the potential rewards against the inherent risks.
It always is in investing.
So what's the bottom line, for our listeners? What should they take away from this whole deep dive into Progressive?
Well, I think the key takeaway is that Progressive is a company with enormous potential.
Right.
But it's operating in a very complex and ever-changing world.
Right. Things move fast.
Investors need to do their own due diligence and carefully assess, the risks and the rewards before making any investment decisions.
And on that note, we encourage you to, continue the conversation.
Absolutely.
What are your thoughts on Progressive's future? Do you think they could become a technology provider themselves? As we discussed earlier, share your insights and your questions with us on social media. We'd love to hear from you.
Yeah, jump into the conversation.
And remember, this is TalkTickers, your go-to source for earnings call analysis and market insights.
We break it all down for you.
We're here to help you become a more informed and insightful investor. Until next time.